Hello, everyone. My name is Greg Jericho. I'm Chief Economist at the Australia Institute, and welcome to our March edition. We've just snuck in March edition of Australia's biggest book club. In 2024, the Australia Institute, we're celebrating our 30th anniversary, 30 years of big ideas, changing policy, debate for the better. To celebrate, we're hosting some special events, and we're also really trying to get this biggest book club really big, really going well. And we've also been doing lots of special events this year. Just this last month has been our Mad March. We've been hosting people like Yanis Varoufakis, the former Greek finance minister. We've had the former president of Kiribati, Anato Tong, here in Australia, speaking about the desperate need for action on climate change, especially given the dire straits, literal dire straits that the Pacific Islands are in. We've been doing research, obviously, into stage 3 tax cuts and had a nice little win there. Work on minimum wages, donation electoral reform, academic integrity, many, many other things. So really big year for us, and thank you all for joining us for today's biggest book club. I'd like to start, as we always should, with the acknowledgement that I live and work on the Ngunnawal and Ngambri country, and I pay my respects to elders past, present, and emerging. Sovereignty was never ceded, and this always was and always will be Aboriginal land. Australia's biggest book club is on once a month, but days and times vary. I know our next book club is actually only in a couple of weeks, so less than a month away. So please visit our website for details of upcoming events. The next one, it's going to be a cracker. It's featuring Lech Blaine talking about the latest quarterly essay, his essay titled Bad Cop, Peter Dutton's Strongman Politics. I think that is going to be a really fascinating discussion. So certainly go along to our website at australiainstitute.org.au to find out details how you can register for that and any other future biggest book club, because I certainly know that one's going to really be worth listening to. So register early and get in. Just a few tips for everyone on Zoom, and we now have over 200 people listening on Zoom. So just a few tips. If you hover over the bottom of the screen, you should be able to see a Q&A function where you can ask questions of Cameron. I'll just bring up the chat so I can actually see it all. You can see there that it is being moderated by Yasmin from the Australia Institute. So please keep everything civil and on topic in the chat. I know when we talk about housing, things can get a bit heated. So please keep it civil or we will boot you out. This discussion is being recorded and will be posted on our website. Now, today for the biggest book club, we are talking about this book here and also that book there, same book. It is my very great pleasure to introduce Cameron Murray, economist Cameron Murray, to talk about his new book, The Great Housing Hijack. It is an absolute cracker of read on, I think, what clearly is really the top hot button topic to do with the economy, if you perhaps exclude climate change. Really, there's nothing more that gets people in Australia talking, whether it's for good or for ill, in angry tones or in exasperated tones, than housing. I've actually am fortunate enough I was given an advance copy so I could give Cameron a really nice blurb. And it really is about, the whole book is about essentially unpicking, I think, all the myths and shibboleths about the Australian housing policy debate. And he really sort of pushes back on a few things that are stated as, I guess, perceived wisdom. And he sort of says, are they really? Is it actually facts that this is how housing operates? And he really gets into it in a great way. And it's an excellent read. I highly recommend it to anyone who is interested in housing and actually wants to be able to, instead of just grumble about it when you're having a chat over a beer, you can actually put forward some really good ideas and actually have a bit of knowledge behind what you're talking about, which is what we're always after with our books. Cameron runs his own think tank, Fresh Economic Thinking. He has written previously a book. It was called The Game of Mates with Paul Fritters. It's been rewritten because housing policy never dies in Australia. Rewritten in 2022 called Rigged: How Networks of Powerful Mates Rip Off Everyday Australians. And certainly the Great Housing Hijack, I think, is in some ways a bit of a sequel to that. I think you'd say, Cameron. It sort of goes a bit more in detail, a bit more economics there going on, really pointing out just how kind of rigged Australia's housing debate is. He has been a landlord, a renter. He's even worked in property development. He knows as much about housing as just about anyone in Australia. So we're very pleased to have him here today. And Cameron, I say welcome and thank you for joining us here at Australia's biggest book club.
Thanks for having me, Greg. I really appreciate your support, and thanks everyone for dialing in. I'm looking forward to some questions.
Excellent. One of the I want to start off with the book is actually quite a really nice mixture. It has some really kind of detailed economics in there, but presented in a way that is quite understandable for lay people and not just people like myself who are real sort of economic nerds. But I was thinking about this last night. I was watching the latest TV show I'm binge watching is Three Body Problem,
Hmm.
which I have to admit I'm watching it and really enjoying it, but I'm not quite sure I understand exactly what's going on in it. And while I was watching it, because it talks about how there's three bodies in this, when you've got three celestial bodies, there's never any actual real solution. And I was thinking your book opens with talking about how in the housing market there are five housing market equilibria, and the problem is they're all moving at different speeds and in different directions. And it's actually when you move one, it affects the other. Can you start off?
Yeah.
What is the five housing market equilibria?
Okay. Yeah, that's a really good analogy, Greg. This three-body problem and the gravitational dance of these celestial bodies. I guess that's how I do see property markets. And if we look historically, um, people have commented on the cycle in property markets for hundreds of years, right? The boom and bust cycle, and the way, the analogy I use in the book is like the tides, right? The moon and the earth are in an equilibrium, but it doesn't mean it's static, it's creating tides, it's creating weather on the earth from the, Earth traveling around the sun as well, but they're still tied together. The Earth can't just move somewhere else, right? It's tied together by this force. And that's true economically in housing as well. And yeah, so there's five big forces um, or equilibrium that are sort of tied together what property prices and rents can and can't actually do, right? There's limits to them because they're tied together like the moon and the earth are tied together. And now the publishers told me I actually deleted a sentence in the book where I said, "Oh, I'm gonna teach you about economics in this book," and they said, "No, don't say that. Just do it." And and they didn't want me to use the word equilibria either. And I figured, well, that's a good filter. If you can handle the word equilibria, I think then you can handle the rest of the book. It's not that hard. The best analogy is the supermarket checkout, and if there's two checkouts open and there's a queue of two people in one and 10 people in the other checkout, because you can swap from one to the other. And that's the thing with market equilibria, is it's this trading ability that keeps things in check. Well, that's not an equilibrium because six people can move from this checkout to this checkout and get out of the shops faster, right? And then when there's six people in each queue, that's the equilibria because no one can switch and be better off, right? And it's the same in traffic, right? You're in a traffic jam on the highway. All the lanes essentially go at once because if one starts going faster, people switch into it and make it go slower. So you might as well just stay where you are because everyone's filing through. But it doesn't mean people aren't trading to sustain that rate, right? And not everyone has to switch to sustain it. It's a market outcome. It's not an individual outcome. So that's the analogy. There's these two options and you can switch between them. So it sustains this economic force to tie them together. And there are five ways this happens in property markets, and it's super important if you want to understand what housing policy can and cannot achieve. Because we are all about, oh, it's supply and demand. Let's intervene in the market and make prices 50% less. Sorry, there's an equilibrium there. Prices just can't be 50% less, right? It's just not a situation. The moon just can't go and start orbiting Mars, right? There's these economic forces. So the five of these asset prices. So the price of a house is an asset, just like the price of BHP shares or anything else. The rental price, the spatial equilibrium, so the relative rent and price between one location and another, the density at the time of development from any particular project, and that's super important when we want to talk about planning and stuff. And lastly, the absorption rate, which is a sort of a technical word we mean for supply, or the rate per period of time that housing gets developed across the market. Right? So density and supply are different. One's the height or the per unit land area, and the other's per unit of time. So that's a different dimension. And there's an equilibrium force there. And so there's these five. So I'll quickly run through how these work, because I find it, once you sort of digest the idea, there's a lot of aha moments to it. And so the asset price equilibrium, imagine our two supermarket checkouts. Well, for any dollar we have, when we take it to invest, we can either put it in the house checkout or any other share in or asset in the economy checkout. And what we're going to equalize is the rate of return that we get on those dollars, right? Because if the housing checkout's getting 20% and everyone else is getting 5%, right, we're going to shift our money out into the housing until the price rises and the return on the dollar goes back down. So there's no benefit from switching, right? And that's why housing moves with the macroeconomic cycle and all other assets, right? It can't just go up by itself or just go down by itself. I mean, there are adjustment periods. People switch lanes in traffic, and then one goes fast, then it slows down, and right. But on average, that ties it together. So when you have that idea in mind, and you hear things like, oh, if we got rid of town planning, prices would be 50% lower in Sydney. You got to think, well, hang on a minute. If prices are 50% lower for housing in Sydney, and I've got my dollars and I'm showing up in the asset markets, that means per dollar invested, I'm actually going to get double the yield on my dollar. So instead of a 5% yield, I'm going to get 10%, right? Whereas the other assets, I'm getting a lower yield. And so I'm going to switch back into property until I get the price back up, right? And my dollars are equalized. So that's just super important. It tells you a lot about, and it links to the others, and we'll talk about them. So you might say, well, yeah, of course, prices can't just go down. But if rents went down, then prices would go down because, the dollar for dollar return would be lower because the rent is lower. But rents also, there's two supermarket checkouts when it comes to determining the rental price equilibrium. And that is can either spend $1 on more housing, or I can spend $1 on more other consumption goods, like having a holiday or buying a car or whatever else. And what you actually find when you look at the data, the surveys of spending on housing for renter households, you find that the median rent paid or out of disposable income is 20%. It was 20% in 2021, 20% in 2001, 20% in 1991. And if we go back to records in 1911, when we had the first New South Wales rents inquiry, now this is a timeless problem, you can sort of estimate that rents were 20% of income then as well. Maybe a little bit higher because it was Sydney, urban area, which is always a premium above other areas. But we've got a century-long sort of market outcome where rents are about 20%. And that makes sense, right? Because if incomes rise and everyone was spending 10% of their money on housing instead of 20%, wouldn't some people go, oh, I'm going to move to a better suburb and a bigger house because my value from $1 extra in housing is now worth more than $1 spent on other consumer goods. So we bid each other up by moving to bigger and better houses till we get back to that. And so that's super important because people have this idea that, oh yeah, over time, people spend a lower share of their income on TVs, right? Therefore, it should also be true for houses. We should be going down and down and down until we only spend 2% of our income on houses. And you've got to ask yourself, well, what's stopping people spending 10% and outbidding you? Like, where is the constraint there? Okay, because they were willing to pay 10% last year for a bigger, better house than you. Why would they stop? And you can actually see this play out. So in Vienna after the First World War, where they had really strict rent controls during the war, to stop people bidding up rents, they had to have a central clearinghouse. So rents were only 5% of incomes because they were tied to the pre-war nominal value. But they had to prohibit you from trading and subletting and moving to other places. Otherwise, people would bid up and reallocate back up to 20% of incomes. And so they had a central clearinghouse where you had to nominate, oh, I've got more kids, I want a bigger apartment. And they'd wait and they'd match you up with other people. And then they'd do bilateral moves or triadic moves, and they'd match you all up, because that's the way that you have to stop those trades to keep the rents down.
So
So I
I
think
just,
that's
sorry, I'll
super,
just come in on that. I mean, this is another thing, and I realize starting off with the five equilibria, it is going into almost a really deep hole. Kid, I was just thinking with your talk about rents there. I mean, for example, in your book, you really sort of push back on the notion that the issue is we need to let the market operate more freely,
yeah.
or if we get rid of these controls, if we get rid of all these supply restrictions. And you do often hear, oh,
Yeah.
it's all to do with local governments and they're holding back density. It's all to do with with rents. It all should be just get the government out. There shouldn't be any rental caps. You really do push back on this notion that it's the problem is that we haven't had enough free market.
Well, we have had lots of free market. We just have to go back in history before all these taxes and regulations and find that housing was much, much worse for most people, right? Home ownership was much lower. Everyone was living in slums. The inequality of access to housing. We often look back because only the best homes from, pre-war and the 1800s have survived, because most of them were slums. They were just tin shacks. Yeah, so that's exactly right. The market has all these constraints on it. And so, yeah, we can let the market rip more if we want, and we'll get more of the market outcome. But that's the actual problem we're having right now, right? The problem we're having is the market outcome is undesirable. And what we're doing is we're doubling down and go, give us more of that. And I'm like, but we're not happy with it. And so I think that's a bit of a mental block here. And that's one of the big themes in the book, is that our debate is hijacked. And so we've come to the view that we don't like market outcomes. So it's not the market that's the problem. It must be some other regulation we're doing that's stuffing up the market, because otherwise we would have the market would deliver us cheap housing and everyone being able to live in inner city Sydney, which has never happened for 200 years before any of these regulations existed. Sorry, this is a bit of a truck driving past.
I mean, I know in
If
your
I had
book,
more money, I'd have a bigger house without having to sit in the front veranda.
I know in your book you had a wonderful quote complaining about Sydney housing,
Mm,
and it sounds like it was written this year, but it was actually written by, from memory, Charles Darwin.
that's right. From 1836, his first day in Sydney, he's traveled the world. He studied all the animals. What's the first thing he wanted to say when he got to Australia? First day's diary. He said, "The number of large houses just finished and others building is truly surprising. Nevertheless, everyone complains of the high rents and difficulty in procuring a house. Sydney's population is 23,000, and as I have said, is rapidly increasing." I mean, really, 23,000 people. You can't even fill a stadium with that. And apparently it's a supply and regulation issue. So it's, once you start reading some of the historical reports and accounts of housing markets, it's very, very hard to take seriously some of the conversations we have now. I mean, the 1919 inquiry, the Piddington Federal Inquiry, the Interstate Commission basically replicated all of the inquiries since 2000 have replicated the same thing, asked the same questions, had the same conceptual confusions, and achieved very little.
And I mean,
So,
but on that, it's not like you're suggesting that there is no crisis or there is no problems. So I think one of the interesting things you point out in your book is that actually something that is often not sort of almost said out loud is that for many people in the housing market, it's not a crisis.
yeah,
We're talking about the crisis. We're actually talking about a very specific segment of the market. Could you expand a bit on that?
yeah, that's right. So there's a there's a market outcome in housing, But the satisfaction without that outcome depends on whether you own the houses or you don't own them, right? A little bit like if you are BHP selling your resources, well, when the price of resources go up, it's great if you own BHP. It's really bad if you need those resources for your business, right? And it's the same symmetry or the same trade-off in housing. It's great for property owners. It's bad for everyone else. And in Australia, we have 67% nearly home ownership, 18% of households are landlords, and only 30% or a little over are renters in the private market. And so when we say there's a crisis, oh, look, rents are rising rapidly, it's really a crisis for about half of that 30%, right? It's a small group of people. And politically, that group is smaller than the group of people who are landlords, right? And unfortunately, far less politically important. Right? Because politicians themselves own 2.5 dwellings on average at $1 million each, $2.5 million of exposure to residential real estate in Australia. And of course, that 18% of households who are landlords are all friends and family of politicians, directly or indirectly. And so you have this great political stalemate that, yeah, making the market price cheaper for housing comes at a political and economic cost to 2/3 of the households who own the $11 trillion of housing in the country. And this is why our debate goes round and round in circles. And that's why, for example, in Q&A on Monday, the last question was, do you want house prices to go down? And no politician can give you a straight answer. And it's true, because house prices going down is bad for the economy. The housing market and the macro economy are tightly linked. So it's bad distributionally, it's bad electorally, it's bad economically. So the question is, well, hang on a minute. You kept promising to make house prices go down, but when you face the reality of falling prices, you actually don't want it. So which is it? Were you just lying, or do you really want it? And I actually talk about this whole, the optimal political strategy is to lie to people and say we want prices to go down and reassure everyone else they're not going to go down, and maybe give some money to this sliver of first home buyers, 90,000 or some fraction of that 90,000 a year, to keep them happy, because subsidizing less than 100,000 people is much better than manipulating the asset price of 11 million households and $11 trillion of assets. And so that's where all the incentive goes. And that's one of the themes in the book, is about these political incentives to tell porkies when it comes to the housing debate.
And I mean, it is so obvious. We hear that even with issues like negative gearing, which you do talk about in the book, and perhaps and suggest that it's probably not as big of a deal as some critics of it might suggest, including critics here at the Australia Institute. But it's clear that whenever even that was brought up by the Labor Party and they were pushing it, they were very clear to make sure, oh no, this won't actually affect house prices. House prices won't go down. So it was, in a sense, they were trying to argue for a housing policy that would improve housing affordability by not making house prices fall at all or anything. And it is, as you say, a bit of an intractable debate. And certainly in my sort of argument about housing affordability is, certainly we know, certainly since 2000, I think it's become a much bigger issue. And yet we've had nearly 25 years now, politicians saying they're caring about it, and 25 years of failing really to do anything about it. And which to me suggests, are they just really bad at it, or are they actually not really trying as all that hard? Which do you think?
Look, I think that has been true for 100 years, not just 25. I think it's just, we had a pretty substantial recession in the 1990s. And we had a big interest rate adjustment between the 80s and the end of the 90s during that recession. And so there was this kind of like glide path where there wasn't this sort of pressure on rising rents and prices, because we're having a depression, interest rates have come down, we sort of bailed out people, and there was nothing particularly happening. And then, like all cycles, and coincidentally with the capital gains tax changes, but I think that that's part of the mix of these effects. I'm sure we would have had a 2000s boom anyway, as we did globally after the 90s recession, which was also pretty global. Things took off again. But in the 80s, there were the same debates. And as I said, these 1911 inquiry into rising rents, the 1919 inquiry, the the various 1930s inquiries into slums and all that sort of stuff that was going on during the Depression, they've rehashed all the same points, right?
Mm.
They're like, oh yeah, we need cheaper houses, but no one's going to build them unless they get a good return on their money. So, oh, I guess there's not much we can do. As if can't subsidize anything. Well, that was true actually in the early pre-Second World War, and the federal and state governments were not as big as they are.
Mm.
And so the whole idea of even a public health system was unimaginable, and the scale of public works and all these things that we've had since the Second World War were unimaginable. So I don't hold it against them, but since that time, I feel it's a little bit odd that we've witnessed massive public housing, programs and subsidizing housing, and it's all worked really well here and elsewhere, and yet it's not the main topic of conversation.
And when we talk about housing, of course, we're not just talking about ownership, we're talking about rents. And I'd argue we actually see the same kind of intransigence in politics around rent, where there will be suggestions, and certainly we at the Australia Institute, and I know even in your book it sort of refers to these things like rental price caps or setting actual limits on rents and
Mm.
the increases. And whenever that comes in, we're just flooded with talks of, oh no, you can't interfere. That won't work. That'll cause landlords to leave the market and everything. What's your
Okay.
view on this discussion about what can we do to protect renters or to assist renters and help affordability on the rental side of things?
Yeah, look, this is a hot topic because we have so many landlords and because we're so invested in rental income as a sort of wealth vehicle. And we do it directly. We don't do it indirectly by owning companies that happen to own houses in a property portfolio. We own one house often directly as a landlord. And so it's very salient if you can't put the rent up when everyone else can, right? So it's politically salient. I've got a few responses, and which is funny because none of this gets in the public debate. Firstly, if you want higher home ownership, landlords must sell their homes because landlords own over 3 million homes. And if they never sell, then we still have 3 million homes owned by landlords, right? So how do we get them higher home ownership? Well, they have to sell to a first-time buyer. So the tenants who occupy them have to buy them from the landlords who own them. And there is no sort of mathematical escape valve from this. Even if you say, oh, but over time, first-time buyers will buy new property. Well, that's never going to happen unless you ban investors buying new property. So only first-time buyers can buy it, in which case you'll complain that we can't build houses because we're all the buyers, all the investors have dried up. So, and if we look to the mid-century after the Second World War, we had rent controls during the war. And it's widely acknowledged by anyone who's looked at it that these rent controls helped increase home ownership because landlords, asset price equilibrium is relevant, had $1 in property, wasn't making any money because they couldn't put the rent up. So they sold it and bought other assets, right? And on balance, when landlords do that, well, first home buyers go, well, hey, I've got $1 in rent and now I can put $1 in buy this house. That's better for me. And that's part of the mystery solved. So you don't hear that. You don't hear that rent control works, which is weird to me, right? Because we know it works because homeowners have rent control. They pay the price today and they never have to pay a high price ever again. Isn't that rent control? You set the price today and then you never have to pay the price when the rent market goes up. Well, homeowners don't pay it either. And it works. We know it works. That's why people pay so much to own a house because fixing the rent today is worth a lot of money. So I just, this whole idea of the incentives are bad if we do rent control. Oh, we're saying the incentives are bad because we have high home ownership and no one's exposed to the rental market, 2/3 of the households in Australia. Some people say yes. Actually, people who really think about the economics of this go, yeah, high home ownership is bad because it means cash poor elderly people can live in expensive homes without getting kicked out if the rent goes up. And I'm like, oh, is that bad? I mean, I guess you could argue it's economically inefficient by the standard in your brain that it's just an invention, but whatever. Why can't they just live there until they die and then someone else will reallocate their house? Like, it's not a huge thing. So that's the other thing. And thirdly, we have rent controls, or we have limiting how quickly rents increase just is about smoothing off, because we know the property market goes in cycles, like the three-body problem, right?
Mm-hmm.
It's going around and around, and we have these periods where rents rise fast. And I've said many times, rents in Sydney last year were not abnormally high, if we look historically, but they were growing abnormally fast. And it's that adjustment process that is so disruptive, because people have to relocate, right?
Yeah.
There's a spatial and physical element to the adjustment process, because not everyone's incomes are rising evenly. That is very costly and disruptive. And that's why people love the security of home ownership. Now, we can smooth that off by limiting how quickly you can increase rents. So for a 25% rent increase, if we said, sorry, the maximum rate is CPI plus 3%, well, instead of putting rents up 25% from 400 to 500 in one go, well, you'd have to do that over 3 years at that maximum rate. So it'll look like this instead of like this, right? Which is just taking out this thing. And that's totally reasonable. The net present value effects are very low, right? Because it only happens at certain points in the cycle. So this whole idea of it's going to screw everything up is silly. It just happens to be a small redistribution from landlords to tenants at certain points in time. And when you add up 3 million landlords and $50 a week times 3 million, you get 150 million bucks a week. And collectively, they got a lot to complain about. And my argument for these controls as a direct way to improve the market outcomes, if we're still going to have such a large group of people in the private rental market, my justification is in Queensland and New South Wales, landlords get their land tax obligations smoothed out, because we know it's very disruptive to boost land taxes 25% in 1 year if your land value goes up. So we averaged the last 3 years land value. So if your land value went up 25%, well, we'd give you 7% increase this year, 7% next year, and 7% the year after. So if it's good enough for the goose, it's good enough for the gander, I guess. This seems completely reasonable to me, and that's why it's so popular in so many rich countries, is having these, what I'd call modern rent controls, which are about smoothing off these adjustment periods.
And also,
Sorry, long answer.
No. It's absolutely good to go in like that. And also, one of the points you make in the book is that most landlords are actually not affected by interest rate rises. It's really only the recent landlord, someone who just if you bought a property in 2020, yes, you're paying higher interest rates than you did when you took out your loan. But if you bought your investment property in 2010, you're laughing still. And yet, and you point out in your book an example where you were a landlord and you were almost felt compelled to raise rent for no real reason at all. And I think a lot of people, there is this belief that, oh no, rents go up and down because of these wonderful economic forces, and they have to raise their rents to cover their mortgages and things like that. But you really sort of point out that that's kind of complete bullshit.
Yeah, exactly. I mean, and even if you bought this year as a landlord, well, you went in knowing what the interest rate is, and you actively went and bought a house to buy that doesn't even cover your costs. Like, it's a choice. This is the thing, right? It's a choice. It's not an entitlement being a landlord, right? Just like if I own Telstra shares or Commonwealth Bank shares, like, it's a choice. If they don't make money, it's, that's the risk I took. So yeah, I find it hilarious. And we also, we have in mind, this is a general issue with economics. We have in mind that landlords are like this representative agent and they've just bought the house, but actually they're this continuum of landlords who've bought at different times and have different costs, and some are losing money, some are making money, etc. And so when interest rates go up, some landlords' costs go up and some don't. In fact, those landlords, if they have lots of cash, might make more money. So should they put the rents down, those landlords, because the cash in their bank is making more money, and those landlords put their rent up? No, it can't be true, right? That rents are tied to the cost of being a landlord. And yeah, when I was a landlord, look, I was the laziest landlord, and you know what was good about that? Good tenants were like gold to me, because I didn't want to have to go and find a new tenant and deal with stuff. I'd rather essentially pay the tenant with a discounted rent to just look after the place and be reasonable and pay on time. And so, that can work. And I think there are actually a lot of landlords like that out there. And good on them, because I think that relationship, there's one good thing about these small-time landlords is you can have a relationship, and it can work really well both ways. The problem is, of course, there are nearly 2 million landlords, and so they're not a representative bunch either. They're very, very different. And some get paranoid about everything because they treat it as like a personal, oh, you want a dog, you want to do this, you want to do that. Oh, but it's my house. I'm like, no, it's not your house. You've literally temporarily sold it to them. That's what a lease is.
Mm.
It's their house until the end of that lease. So I guess I had a different attitude, and I think I was a lot younger, so I didn't really have the expectations. For me, it was like a hustling to make money and go and fix stuff. And
Mm-hmm.
so yeah, it's an interesting mindset, the Australian landlord, but it's always worth keeping in mind. The stories they tell, yeah, there's a vested interest behind a lot of the stories you'll hear from them and their lobby groups and the real estate institutes.
And the reality is, if being a landlord was so bad as these stories are suggesting, why would anyone be? Why would so many people be viewing it as a good bet? And which sort of goes to my next question, and
Yeah.
I want to get into some actual policy
Mm-hmm.
responses, and let's get to the one that we dealt with, or the Australian government dealt with last year, and there was a lot of debate over it. The HAF, the housing.
Oh yeah.
This is the Housing Affordability Future Fund. I'm pretty sure is what I know. There is a future.
Housing Australia or housing
Housing
affordability?
Australian
I have to
future.
double check.
It's something. There is a fund available. It's a future fund.
It's a future fund.
It's was and the figure you hear is 10 billion attached to it, which the government, I guess, would like you to believe that there's $10 billion being invested into housing in some way. You're
Yeah.
pretty critical of the HAF. How do you view it, and why is it such in your view, a bit of a dud?
I think I'm most critical because after so long being an economist and talking about housing, the HAF is like the ultimate financial trick that does all the things that I've been, sort of arguing against. So the HAF is a $10 billion fund. It's not a fund full of houses. It's a fund full of non-housing assets, right? It probably owns some Apple shares. It probably owns, the miners, the banks, and treasury bonds. It's probably just got some cash in it. What's interesting about the HAF is no one asked where the 10 billion came from to buy those assets, right? No one asked. You've got 10 billion. Oh, no, we don't have 10 billion. Oh, we'll create a fund. How are you going to create the fund? Oh, we'll use 10 billion, but you don't have 10 billion. It's just this, like, hang on. So you do have 10 billion? Yeah, but we can only buy these non-housing assets with 10 billion. Oh, okay. Why? Why? Because houses are assets too. In fact, you guys are leveraged into Sydney houses like there's nobody's business. Oh, yeah, but the HAF is special because of some accounting convention, some treasury brain deficiency, whatever it is, right? Some mental block or some political, oh yeah, but politically we have to do this. We have to tie the hands of the next government. What do you mean tie the hands of the next government? If you spent 10 billion on houses, you'd have 10 billion of houses. The next government wouldn't sell them all. And you know what I mean? Everyone will just come up with stories about what this is doing. And so the HAF is not spending 10 billion on housing. It's just finished last Friday, its first subsidy round. What it's doing is saying, we're incapable of building houses or buying them. But what we can do is we can create a fund. And what we can do is we can dish out money from the fund to people who may or may not have ever built a house before either. And they will apply for a subsidy, and we will monitor and manage essentially that fund and make sure that they're doing what we want. We will do everything, all the hard parts, and outsource the easy parts and subsidize it. All the profitable parts you guys do will subsidize you. And so, yeah, there's probably on balance some reasonable outcomes, but it's not like you couldn't have got the same outcomes by literally just showing up and buying houses from property owners. There's plenty of approved housing projects across our cities. You could just buy them. All these middlemen, all these processes, and all these fees on managing $11 billion are completely unnecessary. Because at the end of the day, you're putting houses into a pool of non-market housing, and there's nothing stopping you buying houses any point in time to do that. Just go off the plan.
You point out that, the $10 billion, it came from nowhere in a sense. And If people, when the budget comes out in May, they go looking for, oh, where's this 10? It won't be there because it's off budget, because it's expected to generate a return. And when that occurs, it doesn't come on the budget. It's wonderful. And so you point out, actually, well, why are we putting $100 billion into the HAF? Why 10 billion? It's kind of a bit of a
It's magic money stuff.
it's
It's
magic
completely
money, yeah.
detached. Yeah, yeah,
But it also, as you point out, and this is you have this great line about sort of the Treasury officials and their secret suit.
yeah.
The reality is that that also applies to housing. Housing is, and everyone in Australia, and one of the reasons it's such a big debate is everyone knows that housing is a good return on your investment, and yet
Yeah.
government almost avoids thinking about it.
But it's not true that, this is part of the brain worms that we have. It's not true that governments don't think housing is a good investment, because I can tell you, the Abu Dhabi Investment Council, their government, their investment fund, has bought 1,251 dwellings on the Gold Coast because they think it's a good investment, right? We have this perverse situation in the Smith Collective, which is the former Commonwealth Games Athletes Village and the first build-to-rent project in Australia. The Queensland government, they had the site, they planned it all up, they got it built, and they're like, aren't we great? We planned and organized this great housing project. It's a legacy of the games, but we didn't have to pay for it. Aren't we great? Then the Abu Dhabi government, through their investment fund, is going, isn't this great? Someone else is organizing the project. They're managing everything. They're getting it built. All we got to do is throw money in and get free money back later. And I'm like, oh, hang on a minute. Is it a bad investment or a good investment? Because one government's saying it's bad, another government's saying it's good. And I'm just like, it can't be both, guys. Just please, like, zoom out and look at the market more completely. And then we have things like the Land and Housing Corporation New South Wales, which I think is now called Housing New South Wales. They own the public housing stock, and their balance sheet went from something like $32 billion worth in 2012 to $54 billion worth in 2017, even though they'd sold a bunch of housing. That's a 7% compound annual return in a fund that owns houses. We're getting tricked by the naming conventions of these things, right? That is a housing future fund. It's a fund full of houses that goes up in value, that houses Australians from now to the future. I mean, there's a Utopia episode about this, right?
Yeah.
Rob Sitch is joking. They're like, oh, we'll have a future fund to build a road in the future. He's like, well, can't you just build the road, and then in the future we get the benefit of driving on it? Why would you not build the road now and then still not have it in the future, but have a fund? And I actually quoted Utopia in my presentation to the Senate inquiry into that, but no one wanted to listen to it, right? There's just so many political games. And someone mentioned in the comments, oh, you couldn't spend 10 billion in one term. Yeah, you could spend 10 billion in one term. You don't have to build everything in one term. Just pre-commit to a bunch of stages, and you pay over time in installment payments for getting things built that are already out there. I mean, for example, Lend-Lease thinks it's the end of the residential property cycle. So they're reducing the balance sheet exposure to residential property. They sold 30,000 undeveloped housing lots, 30,000 for 1.6 billion. The fund could have bought it and had 8.4 billion left and just employed the same people to do the same job and push out 30,000 extra houses as fast as they can. Like, it's just so frustrating to me. Like, no one would do this in their personal life, right? No one would do it. Oh, I need to buy houses. Oh, you know what I'll do? I'll get a fund and I won't buy a house. I'm like, but where did you get the money from? If you've got enough money for a house, you don't have to buy a fund first. Just buy the house. I want to buy $1 million house. I'll put in $1 million in a fund. It blows my mind sometimes, but this is the outcome, I would argue, of this hijacked debate where we just can't say things straight. And I think, as I mentioned in camera when we spoke, there's a lot of the vocabulary is just wishy-washy, and we need to be much more clear about it. And HAF is one example, yeah.
I'm really sorry. I do want to get some of the questions that
Great, let's do them.
The audience, but also before we get there, I do want to get to housemate and the talk, because we've sort of been talking about this in a roundabout sense, and your suggestion is that there is a solution for housing in Australia. It's been done elsewhere. Singapore is a country that exists. It's not that far away. We should be able to get some people over there to observe what's going on. What
Yeah.
happens in Singapore with housing, and what can we learn from that with Australia?
So, quick anecdote on Singapore. One of Brisbane's most prestigious apartment developers flew his whole company over to Singapore to look at their projects and get inspired about subtropical urban design, right? And I thought, well, that's really interesting because he's like the most premium Australian housing developer I know, and he's going to go and look at public housing to get inspired. No one, that that sort of crazy situation is something we need to appreciate. So, yeah, so Singapore basically, anyone who doesn't own a house has access to a heavily discounted house between a third and half, sometimes a quarter of the market price, that you can use your compulsory savings to buy if you apply as a couple and you're over age 21. And so over 80% or around 80% now, a lot of people are moving into private markets, but 80% of households in Singapore are housed in public housing. And they got home ownership up from 20% in 1965 to nearly 90% by the end of the 1980s through essentially subsidizing people into homes. And in Australia, the rent controls and especially the huge public home building and the rent to buy and all those discounted schemes that we had after the Second World War got Australia from 43% or so urban home ownership, so it was higher in the regions in the country, up to 71% in about 25 years. So we know that's what can be done. So in terms of people in the rental market right now, I think we smooth out the rents and we have these rent limits. It's totally reasonable. I don't even really get why it's so, I get why it's so controversial. I just wish we could just call people out when they talk about it. But over the long term and the next cycle and the next property cycle after that, the trick is to get out of that 30% of renters, to get those ones that are really susceptible to those fluctuations into something else. Now, we could do that with subsidized rental, or I just think administratively it's better to sell it to people at a discount because then they can choose to paint, renovate, extend. There's no management issues. That's what Singapore does. It's a parallel public home ownership scheme where you can trade within that parallel pool of homes at negotiated prices, but every buyer has the option to buy at a discount. And so my proposal is called Housemate, which is essentially, job seeker, Medicare, Housemate.
Yep.
An Australian version of that, which would build essentially, like we did, public schools in every suburb of the city, housing projects. You can buy them off the plan, you can acquire them at market prices, you can build them, and it offers them to people who don't own houses, who've lived in that area at a heavy discount. And in Singapore, you're required to occupy it for 5 years before you trade or before you can rent it out and move or whatever. And we could build that up over the next decade or two. So the next cycle, out of that 30% of renters, we only have 15% left in the private market, and we have 15% in this parallel scheme, and still all those homeowners are fine. They're doing the same thing they always do, right? And I think that's a lot easier to directly address the concern with housing by giving people the option, make it universal. If you don't own a house, you get access to it, without trying to manipulate the price of this $11 trillion of existing private housing. I think that's a political non-starter. What is not is building up this alternative parallel system like we have with public hospitals, public schools, public roads, public libraries. I mean, we have public parks, but, rich people can have backyards. So we should definitely only have that for the poorest people, right? I'm like, no, universal, just let anyone do it. This is what gets buy-in. And we do it for defense. If you're in the military and you have to go to a town, well, they'll make sure there's a house there for you at a reasonable price. Now, we should do the same when we have people who need to live in the capital cities but can't make those incomes. There should be options for them.
But
so I'm pretty agnostic about the implementation.
It's also on this, you're making clear this is not low cost housing only for people on low incomes. It's something that it would actually have a range of value, range of.
Yeah, you would definitely, there's administrative questions about what do you do with the pool of current housing, and do you put existing public housing tenants into new things so you can redevelop and use those sites. Like administratively, there's many things, but you want it universal. You want it so politicians' children can go, oh, I can still live in Sydney, right? If I'm a nurse or whatever the case is, the classic nurse and school teacher question. Well, it is a question, right? It's very hard. And we know that subsidized housing works because I looked in Europe everywhere. I just looked around, and every city is having the same arguments about housing, and the places where they aren't have huge public or social or subsidized, whatever the legacy that got them, non-market housing for a large chunk of the population. And that's, I wish I wish there was a way to just make everything cheaper without crashing the economy or being political suicide. I wish we could just change taxes and upzone and everything would be solved. But I think it actually takes a bit of hard work and quite a while. And yeah, it's going to be messy, but over time we'll get good at it. Just like building roads is a really complicated and difficult problem, but we seem to be really good at it. No one even thinks about it.
Why do you think, and this is a question from Steve Artis in the thing, why do you think the government is so reluctant to replicate this? As you point out, Defence Housing Authority, and this is something Richard Dennis has pointed out as well. Everyone knows there's Defence Housing Authority. Everyone knows it works, and no one, if they go into defence, is worried about a house. Yeah, because they know there
Yeah.
is. Do you think there is this reluctance to expand it, to make it available, or to actually get back into the public housing or get back into public housing construction? Because as you point out, and certainly I've been banging this drum for ages, back in the 50s and 60s, about 20 to 25% of new home builds were public or social
Yeah.
sector. They were
Subsidized.
non-private
Yeah.
sector. Now it's about 2%, if on a good day.
Yeah, I mean, Kevin Rudd, after the financial crisis, he didn't
Yeah.
do a future fund. You know what he done? He just gave the state $6 billion to accelerate the construction of public housing. It was the biggest public housing construction surge for decades, right? And
Yep.
now we go, no, sorry, you can't just build houses with 6 billion. We must have a 10 billion fund, right? Crazy stuff, crazy stuff. Why? Look, it's not just in Australia, right? This is a global philosophical, political mindset change that's been going on. Governments hate doing things, and I think it's the accountability risk, right? It's all about outsourcing and getting things off your balance sheet to sort of um, create that distance and lack of accountability. It's really bizarre. I mean, you can see it in privatizing things. I mean, all the states have privatized their land titles office. Why? It's like
Yeah.
a fundamental function. It makes you money. It's been going since land titles existed 300 years ago, whatever it was. At 1790 something was the first land title. I forget, but hundreds of years, it works fine. Why do you have to get that off? What's with this? It's the same sort of mental blockage that Treasury has about the future fund, right? I really don't get it. I wish I could get it. I spend all day telling people houses are assets. If it's good enough for you to buy it, it's good enough for the whatever department to buy it and build it. People say the government's incompetent. Okay, fine, just go and buy it. I tell Treasury, just go get a bunch of mystery shoppers, give them a checkbook, and send them to off the sales.
Yep.
Send them to realestate.com. Just buy stuff all around the country. Just don't tell anyone who you are, right? And you don't have to do anything.
Yep.
And you've got all these houses. Administratively, I don't want, people working in the housing department to get on the shovels and try and operate the machines. They're not going to do that. They're going to get experts. They're going to pay them like we do for everything else. But you can even skip the whole thing entirely and just buy houses. Like the Queensland government has bought multiple retirement villages from investment funds that they had vacant that they were trying to offload, and now they're full of people on the social housing waiting list. They've got hotels that were for sale that were empty, and they've filled them with people. It's not that hard. It's just no one's wanted to do it. And yeah, there are constraints on construction right now, but they won't be around for that long. And people say, this is student politics, you're crazy, it's so ideological. Well, cast your mind back, and I use the example of the book before public school existed. And the debates we had about, you're really just going to give every child a school and you're going to just pay for a teacher for nothing. You're going to build them everywhere. Yes. And we did it and everyone loves it. And, imagine now saying, public schools, that's student politics, that's utopian communist thinking or whatever. People would think you're insane because we've got it and it works and it's fine. It's uncontroversial.
Although, ironically, we've had a couple of decades where there's been a real push towards privatizing it.
Well,
It's almost like they've
exactly.
looked at the housing market and got, that'd be good to replicate with education and also with.
Well, Yeah.
Is also there's and I'm sorry, there are so many questions. They're all good. Some of them we have really covered. So someone's asked about other things like, these concerns about is there a lot of unoccupied homes and things like
Oh, yeah.
Airbnbs and that? Is this an issue, or do you think it's something that it's again just fudging around the edges and things like that?
So the headline figure you'll see is 1 million vacant homes. Now that number comes from the census, and it's an estimate of the unoccupied homes on that night, on that one night. And so it's true, on census night there are 1 million unoccupied homes, but most of them just have people who aren't home. They're on holidays, they're traveling, whatever. And so I think the number is close to a quarter of that. I mean, there's holiday homes, there's unoccupied homes, there's homes being renovated, there's homes that are for sale or rent. And those add up to most of it. The better data on unoccupied dwellings comes from, for example, Prosper Australia's analysis of water usage in Victoria. And they look at the number of dwellings that didn't use any water for a year. And they find that it can be high, up to 15% in some suburbs, but they're typically suburbs that have a lot of new apartments completed. And they're vacant because there's an optimal rate at which you rent up an apartment building so that you don't flood the market and push down rents. That's actually the fifth equilibria that we didn't get to talk about, the absorption rate. And I've had managers tell me this Smith Collective one on the Gold Coast. In 2021, they told me, oh, we're on a staged release strategy so as not to flood the rental market. So that was nearly 3 years after it was complete. The Commonwealth Games were empty. And they're like, yeah, we're 70% done after 3 years. So there would have been 1,000 vacant dwellings there in the 2021 census, right? But now they're occupied. So that's where vacancy is just part of that adjustment process to market. So when rents rise, vacancy falls. The other important point to know is when you look at the thing that we call rental vacancy rates, they're also not empty homes. We use the word, this vocabulary is terrible. They're actually advertised homes, whether they're occupied or unoccupied.
Mm,
So it's actually a measure of rental advertising as
yeah.
a share of the stock of rental homes. And so, of course, that goes down when turnover's lower, like people are moving less often. But it goes down also when there's a price adjustment and everyone's trying to jam into the same homes very quickly, which happens when incomes rise. Like incomes have risen a lot. That's why we can pay the higher rents. And yes, there's an immigration component to it right now, but over time we can adjust to that as well. And that's going to be temporary. Yes, a couple of years, but I think if we look back in 5 to 10 years, it won't be, a major thing that keeps things high forever. We'll get over it. Just like we did in the 2006 to sort of 2012 immigration boom. We then had a huge construction boom, and then rents fell for 5 years. We forget that. Rents fell for 5 years from 2017 in the capital cities, nominally. So in real terms, by quite a lot.
I mean, and one of the things, and this is someone, Lynette, and others have also pointed out, the Singapore issue, it's not just about raising home ownership. It also deals with homelessness in a very strong way. In fact, I think in your book, you have an anecdote of someone from Singapore coming up to you and saying, why are you always talking about homeless problem? What's going on here in Australia?
Yeah, so that was hilarious. I was talking at an event. It's pre-COVID, so probably 5 years ago now. And I'd been starting to look internationally at different housing systems and been on the phone to a lot of people in Singapore about, the HDB. And I mentioned in that the classic line, Singapore's a real place and there's no homeless people. And they're like, oh, what? And it's funny. Yeah, they house international workers in appalling conditions. That's true. But they also, employers are obliged to house their international workers. That's part of their obligation as well. And yeah, so I said this, Singapore's a real place. They've got this great scheme. They deal with housing as a core part of the government's responsibility, just like healthcare would be or schools. And a lady in the audience came up to me at the lunch break and she said, oh, it's funny you mentioned that. I'm from Singapore. I'm a social worker. Yeah, we don't have any homeless people. So I came to Australia to find homeless people to work with.
Oh,
She's
gee.
like, I just don't get why you don't just give them houses and help them out. Like, yeah, sure, these people have a lot of high needs, but they just need that sort of support and encouragement and options, and whether it's discipline or whatever else to straighten them up and get them. She's like, well, yeah, that's what we do. And then it was funny because a few years later, there was an American podcast asking a guy from the HDB in Singapore, the Housing Development Board, oh, how many homeless people in Singapore? He goes, oh, none. We don't have them. He's like, what do you mean? He's like, well, you might find someone who's asleep, but they're just having a nap in the shade because it's hot. But they'll have a place because if they're on the street, we'll literally grab them and put them somewhere. And, you know, there's a little bit of the kind of firm hand element to it, which is true. But there's also a bit of, with the firm hand, a little bit of, yeah, well, here you go. Here's your place, right?
Yep.
And I think that is sort of how you straighten people out and get them on a path. You need both. That's what sort of we're trying to do with these support systems. And it's just a question of funding and resourcing.
And
if we want it, we pay for it, right?
I mean, yeah, I mean, you're absolutely right. I mean, we saw during the pandemic that doubling the level of job seekers, surprise, surprise, actually got people on job seeker out of poverty.
Housing homeless people during
housing homeless
COVID.
people actually also stops them being homeless. It's quite interesting. Unfortunately, we do have to leave it there. It is 12 o'clock. A lot of these things, it's amazing. You know, you read this book and there is a bit of, yeah, that seems pretty obvious, Cam. Why isn't everyone else doing this? There are a lot of obvious solutions, but clearly the debate, as we've been talking about, and certainly has been coming up in your conversations, it has been hijacked. I'd like to thank Cameron very much. And once again, highly recommend his book, The Great Housing Hijack. I've seen it in all good bookstores. I was in the airport. I saw it there nicely on display. Get your hands on it. Really good read. You'll definitely know a lot more about housing than you did before you read it. And you'll also be fairly frustrated and hopefully leads you to actually demanding more of our politicians. There are solutions. Let's actually get some done rather than just keep replicating what we've been doing since Charles Darwin rocked up on Botany Bay. Thank you very much, Cam. Thank you, everyone who has been listening. We had well over 300 people tuning in. Really, really appreciate you doing this. As I say, next month we are talking about the quarterly essay, all about Peter Dutton. That's going to be a cracker. Thank you very much. This has been recorded. We will be putting it up on the website at some point. But other than that, thank you very much, Cam. And thank you, everyone, for participating in Australia's biggest book club. Thank you and goodbye.
Thank you.
Thanks for watching. If you'd like to keep up to date with all our latest research and work, sign up to our newsletter. Delivered every fortnight, it includes behind-the-scenes updates from Richard Dennis, an exclusive cartoon from Judy Horacek, details for our upcoming events and webinars, as well as explainers, graphs, and not to mention the latest cutting-edge research and analysis from the team here on the key issues that are facing Australia. Click the button on your screen to check it out.